Hey everybody, welcome to Trading Capital's Daily Analysis video. Today is currently September 25th. As we kicked off another market session, the overall indices finished up 0.4% on the SPX, and the QQQ finished up 0.47%. So clearly technology led this rally higher. IWM also finished up 0.45%. Now look at the level we're at on the SPX here, the S&P 500. Clearly you have this head and shoulders pattern that is technically in play, but we have to really pay attention to this to see if this is going to come to fruition. Right now we are at that neckline. If you can get above that neckline on a daily basis, it negates this pattern and you could see a bullish reversal. One of the reasons why I think we may see that bullish reversal is if you simply look at the NDX, the NASDAQ over here. Take a look at the NASDAQ. So the NASDAQ does not have that same pattern. If you were to draw the head and shoulders pattern, you have a left shoulder here, you have your head, you have your right shoulder. The only difference is you cannot have a down sloping neckline for this head and shoulders pattern. Even if you were to use this pivot over here, you can see that the NASDAQ briefly dipped below that and then it was saved and recaptured that. So one of the reasons why I think this S&P 500 pattern may not play out like most market participants are viewing it as is simply because the NASDAQ is remaining strong. And as long as the NASDAQ remains strong and doesn't trigger that pattern, the markets can and will likely bounce higher due to the fact that tech is still the heaviest dominated sector in the overall market, and specifically the S&P 500. Looking at the IWM, let me just clean this up over here. The IWM did trigger its head and shoulders, left shoulder, head, right shoulder, break. You're hitting some really good support here. This was your bearish range, that where you had the banking collapse, the KREs, the regionals defaulting when rates hit a high, and now IWM is basically back into that consolidation zone. This is a multi-week consolidation zone. You can see you filled a gap today, but one thing I'm paying attention to is this longer term COVID trend line. Major pivot, major pivot. You have actually pierced that level as of today, and the market participants did save it pretty much at the closing bell by closing it back inside of Friday's high. So that's a pretty impressive reversal on the IWM. You would favor more upside. I expect the IWM at the very minimum to fill this technical gap at 179. Again, as long as you stay below the neckline, this pattern does technically have more downside. But if you were to recapture that neckline, then you will likely negate this pattern and see further increases in the small cap run-ups. Now, what's interesting about the market dynamics today, flipping back to the SPX over here, one thing I want to bring to your attention is kind of the market change. The dynamics of the market changed today. What do I mean by that? Well, you had the dollar strong, the DXY yet again coming in with another 0.33% rally. It was up over 0.5%. Piercing that 106 mark intraday, and it's pulled back since. You can see you're right into this pivot zone double top over here. If you look on the weekly chart, this is an impeccable move in the dollar. Look how many weeks: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is looking to be your 11th consecutive week of upside in the US dollar. Now, what's important about that? Well, I don't think there's really ever been a time where the US dollar has had 11 consecutive weeks of upside in a row. So we're kind of coming into that historical, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This had a 12-week period here. You're coming to this time count where, the odds of a pullback, or at least some sideways consolidation or sideways to lower consolidation, is more likely. One of the reasons we're probably seeing the dollar strong today, well, there's a couple reasons. First off, look at the yields. The 10-year just absolutely ripping, making a new high. This is showing the bond market is pricing in inflation being entrenched. You look at the 20-year treasury, I mean, absolutely ripping. I do have a potential move of 5.7% on the 20-year yield. That would be impeccable. How do I get that? Well, if you simply look at this breakout trend line and you look at the longer term perspective, I'm going to flip to the weekly chart. You can see that the 20-year treasury, since you go all the way back to here, has been trading in this range. High pivot, low pivot, high pivot, pierce. What's interesting about this is if you take this low to this high and you put it from this candle low to this candle high, that would be a perfect symmetrical move, and it actually puts you right back up to the top end of this parallel symmetrical channel. So we will see. I don't think it's going to be a straight shot there, but like this period over here, yields kind of just went in parabolic fashion, and you did have a straight move to the upside. That's kind of maybe what we're seeing right now, especially if inflation really gets out of control. Why is inflation starting to get out of control? Well, you have oil still trading at $89 a barrel for oil. But again, what I mean by the market kind of changing today is you had the yields ripping tremendously. The 10-year up 2.1%, the 30-year up 2.67%, and the dollar was also up, but yet the markets were able to squeak out a little bit of a positive gain. So that is short-term positive price action for the overall markets. But if oil continues to consolidate at this high range here, trading above this 382 Fib retrace, you're likely going to expect to move up to this 95.22 level. And again, if you get a couple daily closes and a weekly close above this key trend line break, that's going to be very, very concerning for the overall CPI index, considering how influential the energy market has been. And this is where the CPI cone gets very tricky when you take year-over-year data. You know, every time the oil market continues to surge, we're taking basically data from, you know, the previous month, the previous month, the previous month. So as oil's declining here and as oil's increasing here, that data really gets skewed to the upside. Just like inflation dropped drastically from the high of 9.1% because oil had this impeccable drop. Now you're going to see a reacceleration in the CPI because oil is starting to make a charge higher. And again, this 382, this $88, 87.50 area is going to be pivotal for oil. If you start consolidating and holding this range, you likely will get another move higher. Let's take a peek at natural gas. All right, natural gas is looking interesting as usual, holding above all of the short-term daily moving averages. You're above the 1, you're above the 200. That's the main critical aspect of this. What I'm paying attention to is, do we just consolidate in this demand zone over here? This right now is your big resistance area. It is being bought up, which is a positive sign. The weekly close this week is going to be imperative. Why? Because it's looking as of now to make a higher weekly, your highest weekly close, since you had this little bit of a blow off oversold bounce. If you get a high weekly close this week, you could see natural gas make a big move up and finally break out of this stage 1 basing formation, which is what I like to call it. On that note, I am going to sum up this video here. I'm going to be doing a few other individual videos, variety of trade setups and potential signals that I'm looking at. But right now, the markets, the SPX, you need to recapture this neckline. A daily close above that area, and this pattern could turn more bullish. I still see some potential that there is a little bit of an inverse head and shoulders at play here. If we start forming a right shoulder here on the NASDAQ, look out, because this could be an explosive melt up, a final move to the upside. And that would make sense yet again as to the mega cap tech carrying this market. They're the ones that are the least sensitive to the overall higher interest rate environment. They're not immune, but they are the least sensitive. So specifically, if we get a pullback in the dollar now that we're hitting some major resistance, I expect the markets to actually make a big move to the upside. Take care, everybody. Please give this video a